Hi, good afternoon everyone. Welcome to our year-end webinar. Just a few housekeeping points before we get started. Today's presentation is one way only, therefore we won't be able to hear your comments. We do have quite a large number of people attending this webinar today, so if you can type your questions either in the question box or the chat panel, we'll get those and we'll pick them up at the end. Any we don't get a chance to answer, we will email round to the attendees. If at any point you need to minimise the GoToMeeting panel, you can do so by clicking on the red arrow button. Right, so introducing Insight. I found this little cartoon on the internet and I thought it was rather amusing. As no matter how many times you've been through year-end and at different organisations, it never really seems to get any easier, which is weird because it's a repeatable process, so the more times you do it, you would think that the easier it would become. And I think this is partly down to pressures internally within organisations at the moment to make year-end even shorter and more predictable. But management still need accurate, fast information in order for them to make decisions. So, very stressful time. So, Oracle Financials. This shows the main points in the process you need to be thinking about when it comes to year-end. The size of the bubbles don't really necessarily represent the amount of work, but although in some cases it probably does when you look at the right-hand corner at the bottom when it references auditors. This process may differ from organisation to organisation, but there will be certain elements that are common throughout. So we'll just walk through this and discuss the general points. One of the things you need to address early on in the process to save you work later is making sure all the activities in the sub-ledgers such as payables, receivables and projects are complete, and that if there are any issues that you deal with them up front. Another major thing is ensuring that all third-party transactions have been transferred over correctly, and this can be a big stumbling block later on, and the interfaces could be relating to different departments and can mean toing and froing to get to the bottom of the information. We see companies that bring in information from third-party warehousing systems, for instance, and accountants are desperate to get the information correctly, but warehousing don't really have the same timelines. So any reconciliations that you can do early on with the sub-ledgers and third-party interfaces should really help enormously. The next step to go through is to check that the reversals and recurring journals and mass allocations have been coded to the correct department before starting on a year-end accounting. Another thing is to make sure all your batches are posted. It can be quite easy to be working on something, save it, go off and do something else and forget to post it. And I'm assuming that this is something that I've been guilty of in the past. I've been working on something, saved it away, and never got round to posting it in the first place. And so my trial balance was never going to be correct, so I've got unposted journals. So before you even start to run any trial balance or any type of reports, you need to make sure you haven't got any unposted batches or journals out there. If you have to consolidate, this can be a big job, especially if you had any mergers or changes to your company or organisation or accounting structures throughout the year. And you need to make sure that any new structures are set up and behaving as they should do, as this is key to the process being smooth at year end. There are also going to be final reconciliations and adjustments to ensure everything looks right. And this is probably the stage a reporting tool really comes into its own. You need something dynamic that can show instantly any changes that have been made and see a draft copy of your final account so you can quickly make any changes if necessary and rerun the report. Ideally, the reporting tool that you're using should give drill down to the supporting transactions for investigation. It's then a case of running your report, and there's lots of things you can do up front to ensure this is smooth. For example, are my FSGs running as they should be? If I've made any changes to my charts of accounts, is everything feeding through to the correct parent-child structure? Are my hierarchies reflecting the correct structure? Again, going back to the parent-child. And are my consolidations and intercompany adjustments working in the right way? So hopefully, once you've been through all this, when you press the button and run the final account, you have complete confidence in the numbers. It's then just sort of taking a deep breath and waiting to deal with the auditors. If everything goes to plan, this should be a reasonably painless process, but there are all sorts of things that can create stumbling blocks, and these are the things to look out for and make sure you're addressing early in the process. If you have made any changes to your chartered accounts, make sure these are addressed in any existing reports and make sure they're accounted properly in your FSGs. Sometimes if FSGs don't reference ranges and they reference individual accounts, you may be missing new accounts that you've set up. This could be particularly important if you're using allocations based on these accounts that need to feed through further down the process. If you've got any misclassified accounts, these can cause you all sorts of problems. So as you might find, for instance, a new revenue code's been set up, but it's been misclassified as a balance sheet account, and therefore all the balances are rolling forward incorrectly. Suspense accounts, although there shouldn't be any problems anymore with this type of thing, it does cause reconciliations still at the end of the year. So these need to be looked at early on in the process and make sure they're cleared down as they should be. Make sure all your accruals are posted. This one's particularly close to my heart, as one company I worked at, we're about to run the final accounts and someone noticed that the accruals haven't been posted. This wouldn't have been a major issue if they'd had real-time reporting. But when you have to wait for an overnight refresh, and this was about 4 o'clock on a Friday afternoon, it wasn't a very comfortable situation. And I can probably guarantee if that poor person's still working in accounts, they'll never forgot to do that again. FSGs, we've already discussed those, and that's more about the housekeeping and making sure that they're giving you the right information. One of the things that does happen at year end is people will come and ask you for all sorts of questions that you haven't been asked before about the financial information you're producing. And if you haven't been asked the types of information before, the chances are you won't be able to extract that easily from Oracle, as you won't already have a predefined report for that. Also, you may be asked to look at something from a different perspective, so all your reports might be looking at a particular segment in your chart of accounts, for instance, a segment, but if someone asks you to look at that slightly differently based on, say, company or department, it might not be very easy to do. Or you might be asked to scrutinise an area of the system that you've never even tried to look at before. So if you try doing this on top of everything else, you can really push your timescale down, and it can make things quite stressful, especially if you can't create new reports yourself and you're reliant on IT to actually create those reports for you and get that information. And that leads me quite nicely onto spreadsheets. I mean, these can be really useful at the year end, and most people will be using them at some point in the process. What I think you need to take care of is that you're using the spreadsheet at the right point in the process. If you're using spreadsheets as a way of gathering data to then reconcile, you're going to have to spend a lot of effort then reconciling the data to make sure it ties back to the true information, which is obviously in Oracle. If you intend to produce your year-end accounts in a spreadsheet, it will invariably take longer due to reconciliation issues. I mean, with the best will in the world, it's easy to get the calculations wrong or miss a value from a pivot table, for instance. To add to the pressure, a lot of companies are trying to reduce the time it takes to close the books and produce the accounts. And this can be even more tight if you're reporting to a parent company. Often you're having to deal with changes in regulatory requirements and accounting treatments. I think within the last couple of years, SIPA have made some changes. That's probably led all our councils having to rewrite certain elements of their report. In fact, when I sat down to write this webinar, I did actually ask myself, why on earth did I choose to become an accountant? Because reading back through this, I realised what stressful time I used to have at year end. So, addressing the reporting. So how are we going to address the reporting challenges that can help us tick off the issues that we face? Now, most people using Oracle will have been presented with some of the options up on the screen at the moment. If you have lots of time and money, you may have gone down the ABIE route. It's a great tool, but it does require a lot of skills and is geared towards IT. The issues arise if you require any changes to the report, and this is outside the control of your standard accountants, and so there may be a time lag if you want to change any of these and you have to go back to IT. XML Publisher is quite relevant for the people on this call that are on R12 today, and it allows you to produce reports in a slightly different way, but it's more about the presentation, learn how they look. Some of our larger customers use Hyperion, and this is often used as a consolidation tool. If you've got consolidated information from several different data sources where all the different parts of your company might not necessarily be running a single instance of Oracle. And a lot of companies will also use third-party applications just because the larger Oracle tools such as ABIE, Hyperion don't lend themselves from a financial budgeting point, and also from the time it takes to set them up to smaller companies that use Oracle. And so a lot of people will tend to use something such as business objects or the use of spreadsheets. But one thing to be wary of when doing large dumps of data into a spreadsheet is it can have massive impacts on performance. One of the things I've seen in the past as well, which always sends a shiver down my spine, is where to see someone has their accounts in Excel, They notice they need to post a correcting journal, and they only post that into the spreadsheet and it never goes back into Oracle. So that absolutely creates a reporting audit nightmare. So why do companies still have reporting issues? So if you've got all these different reporting tools, why are you still seeing companies struggling? One of the major barriers is cost. Reporting applications generally come with quite a high price tag and require a large budget, lots of consulting effort, not only from external consultants, but obviously it needs a lot of input from people internally in their organisations. And the timescales are generally quite long. Most BI projects will take upwards of 6 months, and then if changes are required, you need to go back through often a change request process. And do you have the in-house skills to change, or do you need to go back to your service provider and find more budget to get these cubes changed? Due to the complexities of the Oracle application, the reporting tool you choose has to understand this. Also, due to the amount of data in the table, the performance has got to be fast, because it's no good giving somebody a great reporting tool, but if the performance isn't up to scratch, they'll go back to what they've always been using, which is invariably a spreadsheet, and they won't use it because the speed is of the essence at year end. If you have a data warehouse, this can probably answer a lot of the questions you have. But if you get to year end, you really need real time, especially when you're posting journals and accruals and trying to reconcile, and you want to see the effect of those immediately. That's why companies, even with a robust data warehouse system, still have gaps that need plugging. The key facet of any reporting tool is that you must recognise the setup you've created in Oracle, how you are using the system. So based on what I've just mentioned, Excel still sort of remains most people's best friend, and people use spreadsheets far too early in the process to do massive data dumps and then consolidate up to balances. And then you end up back with trying to reconcile back to Oracle, which again comes back to the old nightmare. If you're using a spreadsheet, one of the biggest issues when it comes to audit is justifying where a particular figure comes from and what it's being made up of. This becomes even more complex if you have a balance that is made of transactions from different sub-ledgers. If you look at any account on your trial balance, some of those, if you look at the transactions or the supporting transactions, some of those could have come from accounts payable against one balance, import from a spreadsheet, it could come from a journal entry. So to try and unpick everything is not easy. What we're going to look at this afternoon is accounting intelligence from insightsoftware.com and how it will be able to help you. It's a slightly different approach to reporting from many of the tools I mentioned earlier. And the reason I joined the company was, as an implementation consultant out in the field, I always struggled with real-time reporting and getting the information out of the system quickly. This is more relevant at year end, but often when you're migrating data or you're doing upgrades on Oracle, you just want to make sure that the data is transferred over correctly, and you want to do that real time. You wouldn't necessarily want to write a new report for that because it would take too long. So I think speed is of the essence. So accounting intelligence is what my colleague Sue is going to show you this afternoon. The key difference in what we're going to show you in a moment is that the software is being written by accountants for accountants, and I think that really shows. Our product manager has been an accountant for 20 plus years, and she spent 13 years working for Oracle. I myself were an accountant of 20 plus years, giving my age away slightly. I trained at Leicestershire Health Authority, and then I moved into software implementation, both on financials and procurement. And I was amazed when I saw Insight installed at a customer I was working at, but it only took an hour and it was ready to use. I just couldn't actually believe it. And the reason why we can do that is it will provide you with a number of templates for each module area. And these templates read your accounting segments, parent-child relationships, and any attributes that you may have set up amongst other things. And our standard, which is really key, I drill down to the underlying transactions and the sub-ledgers. This enables our customers to be able to look at information at a balances level rather than doing massive data dumps and trying to consolidate information up. Why not start at the balances and then drill down to the underlying transactions on the accounts that you want to see more information on. We also use the Oracle security, and this is important and gets us a massive tick in the box from audit, because there's no point setting up EBS security rules and policies for your reporting tool to completely ignore that. So at this point, I'm going to pass over to my colleague, Sue Whittaker. Sue joined us about 5 years ago, and she used to implement our software for one of our larger customers that was doing a global rollout. So when that project came to an end, we poached her to work for us Anyway, over to you, Sue.
Okay, thanks, Jules. Okay, so what we aim to achieve in the product demonstration part of this webinar is to highlight how you can bring your year-end under control, as users will be able to access their data instantly in real time, and this is all without having to wait for data extractions or refreshes like Jules mentioned. And basically the whole process can be sped up, making the year-end close more accurate and more efficient. So by using the standard templates within Insight, you can have instant access to the data during the build-up to the year-end, as well as being able to produce those year-end reports as well. Firstly, before we even get to think about running our TB, we really need to make sure on that diagram that Jules showed with checking for all unposted batches. We'll do that little exercise first. So if we open our template, we're going to put in our year's date range. So I'm just going to put in 2008. And we only want to check for unposted batches. So we can go into our lookup list of values, bring in our unposted flag, and then run that. So before we even start to try and build any of our statutory reporting, we really need to make sure that everything has been posted first. So here we can see we've still got some unposted transactions. And we can either do one of two things now. We can either drill down into the transactions to find out the batch that hasn't been posted, or in this particular report that we started from, we could add in the batch details into this report directly. So I can bring in the batch name and the GL batch description. So now you can see all of the batches for the whole year that haven't been posted. Okay, so now that we've got the details, and hopefully we will have corrected that and posted those in Oracle, we could now run a trial balance, check that everything does balance before we actually create those year-end reports. So again, using our standard templates, we'll start with our GL balances. I'm just going to consolidate this up to the account level. And because I'm using dynamic filters, it's looking at my current period, and so my final period is December, and it's looking at my current year, 2006. And when I scroll down to the bottom, we can see here that it does actually balance. Now, unfortunately or fortunately, whichever way you want to look at it, even sometimes demo data does balance, but if it didn't balance, then you could change this report to be able to look at each individual month and hopefully highlight where you might get those differences. So if I change this just to be my period to date, run this for each of the 12 months, and run that, and then hopefully when you scroll down to the bottom you'll be able to see which month was out of balance, if you did have any that were out of balance. And then you would have that drill down capability to drill down into the transaction summary, which will highlight where those sources have come from for those journals. Has it come from payables, projects, consolidation, a spreadsheet? And you can keep drilling down into the lower level detail, you know, on the payable side, looking at your vendor, invoice numbers, and even drilling across into the subledger itself. So really starting to get to the low level detail and really helping to highlight, you know, where you've got your imbalance. So if I go back to my trial balance, so now that we have our trial balance that does actually balance, we could now create our P&L. But before we do that, and from an auditing point of view, you might want to save this away. And to save it away, we can export it out to a PDF. We can timestamp it, put on a logo, and then export it out to PDF so we can get that signed off. And also then we've got a copy there as well for auditors. Okay. If I go back into Insight. So now that we've got that, we can now start to have a look at our P&L and creating our P&L. Now, you could either set up your own hierarchical structure directly with Insight for this, or like most Oracle customers, and like Jules mentioned, most people would have a parent-child relationship already set up that would cater for your income statement, or you might even use an existing FSG. So for this particular example, I'm just going to open up the year-end P&L that I've already created. And by having utilised that parent-child relationship will mean that we're automatically picking up any chart of account changes that will have occurred through the year. And if I show you how that's being built, we've imported it through a wizard. And what's important, it puts it into a nice, easy to read tree structure, so you can easily see which children roll up into which parents. And then we've imported that into the report alongside the actuals and the budgets with the variances as well. Now, to make it complete, we brought in last year's figures as well. And because we always want it in this format, we've saved it away so it can be used for next year. And of course, you could also export that out into a PDF format if you wanted to as well. And again, because it's using these dynamic filters, so it's using current period, current year, last year, you wouldn't need to change your report each year, because it will dynamically know that you're reporting for this current year and for the previous year as well. So our next and final report that we need for our statutory reporting for year end is the balance sheet. Now, with this P&L, I'd already had that report saved away, but I just want to demonstrate to you how easy it is to create something like a balance sheet from scratch. And this time I'm going to use an imported FSG. So if I import my FSG row set, my balance sheet, and you can see the structure on the right hand side and all of the calculations it's using. So we switch that on. I'm just going to change this to look at my year to date. And I'm also going to bring in last year. And then we just want to change the columns that we want to have displayed onto our balance sheet. And you can also drag and drop columns, so if you want to change the order of how you want things to be displayed in. So now straight away we've got our balance sheet for this year and last year. And then one of the most common things you'd probably see on a balance sheet would be the year's movement as well. So we can add that into the report, which will take 1 year from another. And when I scroll down, we can see that we've got our total assets here. Balances are total liabilities, so we can see our balance sheet balances. So we then probably save this away, and because this will be the exact format that we want to run each year. And so rather than having to do those countless data dumps consolidating up to this level, if it's a repeatable process, if you've got those reports saved away with these dynamic filters, you don't have to keep recreating this and consolidating and saying this group of accounts makes up the total liabilities and so on. So what we've just shown here for the statutory reporting, people would normally spend hours and days downloading transactions and spreadsheets, consolidating up, re-downloading when they realise journals haven't been posted or need to look at other areas. So by using Insight and the standard templates and saving away those reports that are part of the repeatable process, you can get this data into this format instantly and in a safe and controlled format and environment. So now that we've prepared the statutory accounting for year end, we can easily produce the supporting management information. Now this allows the end users to go that extra mile at year end, because it's not just about statutory information but also about the supporting management side of things that helps drive better decisions within the business. So here I've created a report pack that contains all the relevant supporting information, and as this is part of that repeatable process, like I've said, we don't have to create these from scratch each time, and therefore we're instantly saving time and speeding up the year-end close. So this first report in the pack is the P&L again, but we're looking at this slightly differently from a management perspective. And if we want to look at this by department, we can use our filters, put in maybe one of our key departments, and run that again. And now we've got a departmental P&L, but going across multiple years, and then just looking at the movement between this year and the previous year. I've also included a third year in this report as well. And we've also put on some conditional formatting on this yearly movement calculation just to highlight certain differences over the years. And this second report in this pack is a consolidated ledger report or set of books if you're on 11, which is often difficult to get directly out of Oracle. And if you translate your currencies, you can bring in the translated flag into your report. However, the multiple ledgers that we've brought into this report are all using US dollars. And so we've pivoted the ledgers across the report and given an instant, easy, multiple consolidated ledger report with a total going across all the ledgers per each of these expense lines. So this third report basically gives you great visibility of all the accruals. And as a year-end check, the accruals in purchasing should match the accruals that sit in the general ledger. And this report gives you all the supporting detail of the accruals with the associated purchase orders and the requisition details. And if need be, it will also give you the pertinent drill down into the requisition detail behind that if needed. So this fourth report is good management information for like a procurement manager. It's showing the top 10 suppliers for the year. And the procurement manager would like to know who they spent the most money with, and by highlighting the number of invoices, how much they've spent, etc., it should help them with renegotiating terms with their suppliers for the next year. Another key aspect of supporting management information is to identify your risk exposure by looking at your age debtors. So here we've got a very top level report per customer, and we've included on this report a calculation to show you the percentage of debts that are over 120 days against the total customer's debt. And note that this is being run as of the year end, so as of the 31st December. So even if you're running this way on the 5th of January, you can still go back and run this as of the 31st December. And our final report within this report pack is looking at our fixed assets net book value. But we've summarised each of these into the multiple fixed asset categories that we have within Oracle, and also covered how many assets belong to each category. And this will help support your balance sheet information. One of our customers here in the UK was able to save 2 whole weeks at year end by using a fixed asset module and being able to get all this multiple information in one place at one go. Now finally, once you've closed your year-end books, all this information is still available to view through Insight, and you can even view these through our console interface. Now previous customers have given their internal and external auditors these reports through the console, and this has enabled them to carry out their own investigations by using the standard drill down functionality. So each of these same reports in this report pack, each of them have automatic drill downs. Click on a different one, you can see you can drill down for requisition. So it's just empowering them to find out their own answers and giving them those drill down functionalities. And you could also still export this out to PDF by printing everything out into a single PDF, and then they can still have that saved away, and they've got all their information within the PDF as well. Now, we will be taking a closer look at report distribution through the console, which really aims to show how the business can answer its own finance questions, but we'll be doing that in our next webinar, which is on the 11th of December. So right now, I'm just going to hand you back over to Jules.
So, as part of a process that we've done recently, we just had our annual user group, and as part of that, we've actually polled our customers to see how much time they actually thought they were taking off routine tasks. And by routine, I don't just mean year-end tasks, I mean month-end, creating management reports, and also haddock reporting, because I think I mentioned earlier that as part of the year-end process, you still get all the requests for ad hoc information. They don't go away at year-end. In fact, sometimes they actively increase at year-end. So here are some, depending on the size of the organisations, obviously, these are the amount of times that people felt they recovered as part of these processes using Insight. And there's a little quote there from Daniel at Ladbrokes at the bottom. So just to summarise, accounting intelligence really does empower finance to recover time by speeding up processes, because it's real time. You don't have to rely on any data dump. It's connected to the database, so we're reading real time from the database, so we'll reflect any transactions or journals that are posted. Using the EBS or Oracle security, we also make sure the data is secure, so people can only see in Insight what they could see in Oracle, otherwise there's no point in setting up that security. And there is immediate time to benefit. I think we've actually got some existing customers on the call today, and they would verify that we've actually done installs on their data and the software's up and running, and then we will show them right in report an hour after we've installed the software. So I think what's really, really important is you need software that simplifies, not complicates processes, and I really do believe that accounting intelligence by Insight does actually do what it's said it's going to do. So just a little bit about Insight before we finish off. Insight own the software. We do not resell the software for anybody else, and nobody else resells our software. So we are the authors, and the software is written in between Denver and London. We've got lots of offices around the world. Our three main head offices are Denver, London and Sydney. So if anybody on the call today that's from a global organisation, that enables us to give our customers a full 24-hour support. We're now up to over 50,000 users and about 650 customers in over 100 countries. So we've got very, very good coverage, and people are using our software month end, year in, out all the time, and I'll say they couldn't live without it. And we've been the market leader in this for 19 years. So some of the customers using our software, you may or may not have heard of them. Basically, anybody using Oracle, potential customer for us. I think what's interesting, some of these people have been using Oracle for many, many years. And it's only when they've had to change their reporting or they've had a merger with another company and they've had to report slightly differently that they've realised how painful it is to create standard Oracle reports, and they've looked around for an easy-to-use alternative. So, as Sue said, we will be running another webinar on Tuesday the 11th of December, and this will be geared more towards the finance, how people within the business can answer their own finance questions. And that will be concentrating on the console that we shared very briefly at the end. My number's there if you've got any questions, and my email address is also there. And we have recorded today's session, so if you feel this may be relevant for the people in your organisation, please do let us know and we can happily send you the link to download that. So at this point, I think we've just had a couple of questions that I think probably need answering. Someone said it wasn't obvious, do we run over both 11i and 12? And the answer to that is most definitely yes. I'd probably say there's 60% of our customers are on 12 now, and probably 40% on 11i. Those will be moving over. Most of them are in the process of moving over to 12. And Insight really does help when it comes to migrating data, validating balances and transactional information that you're moving from 11 to 12. Right. I've also got one other question here. How can I access tables that Insight doesn't cover? Well, that's done very easily. Users have the ability to actually create their own template. This is done using our Designer Express software, and that enables you to cover any table within the Oracle database schema. So any table that you have, you can create a template over, and those templates, more importantly, look and act the same as our existing templates. So to an end user, they wouldn't know if the templates have been written by us or by yourselves. And I've also got one other question here. Can we schedule reports? The answer to that is yes. Through our administration module, we have the ability to schedule reports and email those out to via Excel or PDF. So if you've got people out in the business and you want to create monthly report packs, not necessarily just at year end, but these are probably monthly processes as well, you might want to email your department manager a set reporting pack that they can just open and verify the figures. So that's all the questions I had. Did you have any other questions? Come at you, Sue.
No, you've covered all the questions that have come through so far.
Great, okie dokie. Okay, well, if anybody would like any further information, so my details are on the screen there. Thank you very much for attending today's webinar. Thank you. Goodbye.